welcome back. You're watching Your World at 10. Now, it's a case of regional interests outweighing global urgencies. In the throes of local elections, many EU countries, Germany and France, for instance, are opposed to rescuing Greece. Meanwhile, China and the United States also in a year of regional elections, are upping their rhetoric over the value of the renminbi, with both Barack Obama and Wen Jiabao playing to the domestic gallery. So will politics score over urgent economic issues? Joining us to discuss that, Paul Donovan, Managing Director of Global Economics at UBS, and Alex Barrett, Global Head of Client Research at Standard Chartered. Paul, Alex, thank you very much for joining me. I'll start with the more urgent issue, Paul, and this question is to you. Germany seems determined to stall any aid to Greece. Sarkozy doesn't seem to be in any stronger a position after this week's elections. What is the likely outcome? Do you think Greece will be forced to go to the IMF? And if yes, what implications do you think that has on the Eurozone unity as well as the Euro?
Well, Germany isn't trying to stall any aid for Greece. They just don't want to sign the cheque. Sarkozy doesn't have any problems with the Germans paying for Greece, but he doesn't want the French to pay for Greece. So we've got conflict going on. The EU summit that's coming up, I think, is certainly going to have to discuss some kind of aid to Greece, and I think it's probably 50-50 as to whether they go to the IMF. The danger if they go to the IMF is not really in the near term. Greece is going to be bailed out. We know that. It's simply a question of where the money comes from. The problem is, if Greece is forced to go to the IMF, that's signalling that Europe can't tackle what is, after all, a fairly small-scale problem. Now, this is just the dry run for the bigger problem that the euro area has got to tackle, namely that the euro doesn't work. They've got to restructure the institutions of the euro area over the next 5-10 years. If they can't agree on bailing out Greece, which is a 25 billion euro problem, they're not going to agree on the larger issues of bailing out the entire eurozone as a whole, restructuring it, creating a fiscal union and making it viable.
Alex, Paul gives it a 50-50 chance that Greece will get aid from the EU. What do you think the likely outcome of Thursday-Friday summit is going to be? From what I last read, the risk premiums on Greece's bonds have already shot up this week.
We'd actually say that in the run-up over the next 6 weeks or so before, as we get past the funding hump that Greece has over that period, we will see the European Union coming in. We don't see that the IMF will get called in. As Paul said, that this is a relatively small problem, and Europe has to be able to be seen to be able to sort out its problems, because further down the line you'll have Spain, Portugal, potentially even Italy at some point down the pipeline. So we think that there will be something coming out of this summit. It may well just be a placeholder because of the political concerns that there are in a number of places, particularly elections in Germany. Nobody wants to be seen to be bailing them out. But ultimately, we believe that the European Union will have to bail out Greece. It may have to be at the cost of the Greeks having an even more clear and straitjacketed austerity campaign, so that the Germans or the French seem to be happy to be supporting them, but the Greeks are taking most of the pain. I think the issue is going to be potentially maybe more on Greece, whether they're willing to take that pain without getting the money up front, knowing that they will get it at some point. And already there's been some rhetoric coming out of Greece saying they're already suffering from effectively an IMF-type package, but without getting the funding. So domestic concerns will also be rampant in Greece as well. But our view is that the European Union and Greece will come to an arrangement. We will get through this funding hump, and they will put off the tough decisions till later. And in the meanwhile, we'll be moving gradually towards more of a political union, which is the only way that in the long run the euro is going to be a success.
Alex, part of the reason why Germany has to play ball is because German banks have considerable exposure to Greece, and so therefore whatever the local political compulsions are, Germany will have to come through by Friday, won't it?
Maybe not by Friday, but it will have to come through in the end. The German banks don't just have an exposure to Greece, they have exposures to Spain, to Portugal, to Italy. It's inevitable. The Germans themselves have been big exporters. They've been running a big trade surplus with the rest of Germany and with the rest of Europe, and as with China as we get onto that later, having a very big exposure to US Treasuries, inevitably somebody who is running a big surplus is building up debts in other countries, and they have to balance getting their money back from those countries with continuing to have those countries still functioning and be able to export goods to them. So it's a fine line. The Germans will probably see sense in terms of the overall long-term benefit for Germany. They certainly don't want to see major trading partners going down, going bust, because ultimately that means that their money won't be coming back. So they'll want to tread that fine line between getting enough of the money that they've already lent to these countries back without giving too much forward in the future.
Paul, before I come to the China issue, a quick reaction on what all of this means for the euro through the course of this year, because that will impact the way the dollar moves as well.
Well, I mean, the problem we've got with global currencies at the moment is finding a currency that's actually going to be strong. I mean, there's plenty of currencies you can sell, but it's very difficult to find one which is actually attractive enough to buy. I think, assuming that Greece gets some kind of deal cobbled together, it's bailed out in one way, shape or form, that reduces the risk premium in the euro area in the near term. And as a result, I think we get a recovery in the euro perhaps coming through over the course of, let's say, the next 3 to 6 months. So some upside potential for the euro in the near term. As we look longer term, we've got this battle going on between, is Europe going to actually get down to creating the fiscal union, which I agree with Alex, is absolutely necessary if it's going to survive in the long term, and is the United States going to do something to make itself more competitive? The US is a grossly uncompetitive economy, has been for years. The Eurozone has got a currency which might fragment. I mean, which loser do you want to back?
All right, Paul, let me move to the other big issue that's dominating the global headlines right now, and that is the war of words between the U.S. and China. We've got a bunch of different moves going on in the U.S., including a U.S. Senate bill that seeks to levy duties on imports from China if Beijing does not revalue. A letter from 130 lawmakers to President Obama to take action against China's refusal to revalue. We've had, the U.S. ambassador to China make strong comments. Where do you think, or how do you think this is going to play out? Because there is one set of opinions that says that the more pressure the U.S. puts on China, the more counterproductive it's going to be, because China will refuse to revalue under global pressure.
Well, I mean, I think the first thing to say is that as far as the US position is concerned, revaluing the renminbi isn't going to help them at all. China is a third world country. It's producing third world goods. The United States is not yet a third world country. It's not competing in the same space. So revaluing the currency is going to do very little for China-US trade balances overall. The second thing I think to say is that there's a strong sense of déjà vu about all of this. So if you go back to 1995, the US, the Clinton administration in those days, was saber-rattling with Japan. There was a lot of toing and froing over autos in particular back in 1995, a lot of pressure, a lot of concern on the currencies. On the one hand, you had the US saying we must see more action from the Japanese to open up their markets, to move the currency. And from Japan, you were getting all sorts of rumours about Japan's going to suddenly jump treasuries. I think in the game of brinkmanship, both sides know that they've got a lot more to lose than to gain by pursuing this too aggressively. So even with the November midterm elections, I'm relatively hopeful that comprehensive trade bans, trade tariffs are going to be avoided. I think what we're going to end up with is selective trade restrictions. One sector or another will be subject to restrictions, but overall I don't think we're going to get universal trade restrictions.
Alex, how do you see the situation with the yuan playing out? Because there are many, banks across the world that actually do believe that the yuan is pretty well valued and is not, undervalued, so to speak. So where do you think the yuan-dollar fight is likely to head over the next 6 to 8 months?
We're not expecting any significant revaluation. We're not expecting a big one-off, but at some point, probably in the late second quarter or early in the second half of the year, we're expecting the depegging of the Chinese yuan to pick up again. So we'd expect a very gradual appreciation of the renminbi. I think Paul made a very good point earlier. I mean, you've got China producing goods, paying people wages, maybe $3,000 a year, a 5%, 10% 10% revaluation isn't going to suddenly make a $30,000 a year factory worker in the US competitive against a $3,000 a year Chinese worker. So this is not going to be the major way out for the US in terms of its trade balance. So we're expecting gradual appreciation, and that's as much as anything because China needs to gradually internationalize its currency. It needs to probably increase its ability to buy commodities over the long term, but that's not something that it's wanting to do over the short term. As well, we've also got the issue of hot money. They don't want to suddenly see a big revaluation to then attract more money to be flowing into China, expecting even further revaluations. They want to make it very clear that it's going to be slow. If anything, they want to make sure any speculators, and there are a lot of speculators in the renminbi market at the moment, any speculators get hurt, and the best way they can do that is by crushing the volatility and making things happen, but happen very, very slowly.
Paul, I've got 10 seconds to go. A gradual appreciation of the yuan over the course of the next 6 to 8 months. Would you agree?
Actually, we would go for a 5% move in the second half of this year, possibly coming in a one-step move, but certainly I think 5%. More than that, I think is unlikely.
Gentlemen, thank you so much for your views. Paul, Alex, thank you for joining us on Your World at 10. Well, with that.